All right, how's it going, everyone? Episode 2 of All Stock Trading. And today I'm going to talk about Apple, one of my favorite companies to be a part of, not only as a consumer, but an investor. And much like the video yesterday, Apple was founded by another visionary many people know, Steve Jobs. And unfortunately, he's not there anymore. He definitely revolutionized the world with the iPhone, and Elon Musk is trying to do it with the car, so we can see how hard that really is. And Apple started in the garage of Steve Jobs and has now become the largest company in the stock market by market cap. So if anyone knows how to build a base of customers and make a great product, it's definitely Apple. So I want to talk about the stock and why I think that not only is it undervalued, but also it has a lot more room to grow as far as revenue and delivering returns in the future. So we all know that Apple has a long track record in the stock market. Before they divvied up the stock, it got to around $700. And then suddenly people stopped buying iPhones and Samsung, and the story goes on. But when you look at the fundamentals of Apple, there is no other company in the market that can compete. For example, the smartphone, right? One of the most popular devices in the world. I mean, who doesn't have a smartphone? I'd rather give up my car than my smartphone, because then at least I can take Uber or Lyft. And everyone has been saying not only that Samsung is going to take market share and that Apple is going to sell less iPhones, but also Apple is very daring because they continue to raise the prices of their iPhone. This year, another time that they decided to raise prices, taking the 10 to $1,000, staying there, and the 10s Max to taking the 10 and taking the 10s Max and making it $1,100, keeping the 10s like its predecessor, the 10, at $1,000, and now they're coming out with the 10R for $750 for, people that don't want to pay $1,100 for a device that can revolutionize the way you live and already is. So I want to talk about some of the metrics of Apple stock. So let's start with revenue. So Apple's main revenue right now comes from its products, right? The iPhone, the iPad, the MacBook Air, Pro, the desktop, Apple TV, Apple Watch, and AirPods, right? Those are the main products of Apple. Now, what I'm here to tell you is that Apple is no longer just a consumer electronics company. It's become as much as a service company and a subscription one as Netflix or Amazon. Because the thing with technology and what Tim Cook, after taking over, he was COO under Steve Jobs. Now he's CEO, now that Steve Jobs has been gone, is he transformed the company to be much more profitable. So on consumer products, look, they're making them in China. They keep selling the prices of these phones for a lot higher, but there's only so much profit margin you can make, right? So this year, last quarter, Q3 2018, Apple recorded its best quarter in history of the stock and the company in general. So revenue was of $255 billion, up 17% year over year. Profit margin up 22%. Profit margin is at 22%, which, by the way, because of the service revenue, which is the second source of revenue right now, that should keep increasing because, as you know, it costs a lot more to produce a product than to give a service. Also, their earnings per share has gone up to $2.34, up 40% year over year. Let me put that into perspective. A company the size of Apple with $255 billion in revenue. We're talking this company has more in revenue than some countries do in GDP in the whole year, and they do it in one quarter. So their EPS is up 40% to $2.34 for one simple reason. Huge buyback of the stock going on. As you know, today and this year has been a record year for companies buying back shares of their stock. If you don't know what that means, pretty much there's a limited amount of shares available to the market. A company can invest their own money in their stock if they believe it's undervalued and will go up. And Apple clearly believes it because they're spending $100 billion in buybacks of shares this year, of course, causing their earnings per share to go up. Now, some of it is natural growth, but 40% is adjusted, but 40% growth for Apple is unreal. Now, everyone talks about the iPhone dying. Everyone talks about how expensive it is. But people keep paying, right? I mean, are you going to stay with your old iPhone and just not catch up with technology? So last quarter, Apple sold $30 billion worth of iPhones, right? Great year. Their average selling price, this is key. So how much each iPhone is selling for on average went from $606 the year before to $725. So that pretty much means that people don't care that the iPhone costs more. And it's because the loyalty and branding of Apple is one of the most impeccable in the world. I don't know what other tech company or company in general that people, no matter what, how much it costs, will continue to go to Apple and not even consider the other options. Sure, Samsung might be $500 instead of $1,000, but the quality of Apple, and they treat their customers so well, there's no competition essentially. Now, what else do they sell aside from iPhones? So right now, Tim Cook has really focused on other products. So you've probably been seeing them around. One of them is known as AirPods. I actually have a pair right here. And these AirPods cost $160. And you might say, that's a lot for a pair of AirPods. And I'll say back, yeah, but where are you going to connect your regular headphones? Huh? And also, these are the highest quality Bluetooth non-cable headphones on the market, I think, by far. Now, we all got a watch, right? Everyone usually wears a watch. The trend with Fitbit and activity watches to help you track your health and whatnot is that you buy it and then, maybe 1 or 2 months later you realize, wait, I kind of don't want all of my phone on my watch, and it's not very useful information and it's very hard to manage. But of course, what has Apple done? Not only have they made an iWatch that you can interact with the whole Apple ecosystem, they also made it so that it has a lot of health features too. I don't know who watched the press conference earlier this month, but Apple said that it can now detect falls. So if you're elderly, remember those commercials? I've fallen and I can't get up. Well, Apple Watch now knows that you've fallen and will help you get up. Then, what else they've done? They've got a cardiogram scanner. So they teamed up with the American Heart Association to come up with some kind of measuring of the heart palpitations and can tell if there's something going wrong. Another leverage that they can use as a health benefit. And then they just try to get you in the ecosystem. The AirPods, the Apple Watch, the iPhone, the MacBook Air, the Apple TV. The whole idea is that you own all the Apple products and services in order to become part of the ecosystem and have a flawless experience. Apple isn't here to try to sell you more stuff. They actually want to make the technology simpler, hence going to smaller devices, hence going to no audio cable, hence the Apple Watch. Now, another huge benefit to having an ecosystem the size of Apple, where, look, if you have an Apple Watch, the AirPods, the MacBook Air, the Apple TV, what are the chances that you're going to ruin your whole ecosystem day to day by getting a Samsung or an opposing device? I would say slim to none. So not only does it increase revenue and allow customers to interact more with Apple, but it also creates a new moat and barrier that other competitors competing with Apple just have a struggle infiltrating and getting customers from. Now, let's get back to the valuation of Apple and why I think it's undervalued and has significant room to run. So, the iPhone selling great. Revenue up 17% year over year. Profit margin 20%. I want to talk about service revenue. People don't give Apple the credit it deserves when it comes to the amount of service they provide to their customers. Now, not free service. No one provides a free service. But let's think about them. There's Apple Pay, Apple Care, iCloud, iTunes, and App Store. Out of all those segments, I know that Apple Pay, Care, and iCloud is the largest as far as every consumer. And then the App Store plays such a crucial role into Apple's whole ecosystem because there are literally companies that survive and thrive in the App Store alone. If the App Store were to disappear, these companies could no longer exist. I'm talking games, Fortnite, PUBG, FIFA. I'm talking productivity apps. I'm talking all kinds of social media platforms, right? Instagram, Facebook. The App Store essentially is an economy and area of its own. So the real interesting one is Apple Pay. A lot of people think PayPal is the king of online services and transactions. Sorry to tell you, but Apple Pay has surpassed PayPal and Venmo, which is owned by PayPal, in $1 billion of transactions handled last year through Apple Pay. In the future, we all know that cards are going to become obsolete, not only because they're a huge liability to carry around. If you misplace one or somebody is trying to steal your card, it's very easy and a lot of people don't know how to protect from that. And every store wants to have a transaction with Apple Pay or online because the less that they have to worry about having all these machines, then suddenly paying becomes a lot more streamlined and efficient. We all go to those stores. If you're in Aventura, Raw Republic, a great store to go shopping and pay with Apple Pay. And the thing people don't understand is that Apple is also transforming into a business-to-business platform. What do I mean? iPads are used by consumers. Sure, some people like it because it allows you to see more. Some people like it because it's faster. I'll tell you why businesses like it. They like it because it streamlines checkout and paying. When you go to a restaurant and they come up to you and ask for your order on the iPad, and then they come up to you and ask you to pay on the iPad, and both transactions take less than 10 seconds, that is a lot more friendly and efficient, not only for the customer and business, but also than waiting and having to give a check and then sign the receipt. And then, how about you don't even get the receipt? How about you just get it through email and then send it straight to your accountant? And then the business can do the same thing. So, a lot of room for growth for Apple, business, consumer, etc. One of the most important aspects when considering to invest in the stock is the valuation and the ability for it to survive a recession. So when it comes to valuation, Apple currently has a price to earnings ratio of 20. That means that their share price is 20 times what they're making in earnings. A lot of companies have different earnings. Amazon, for example, is in the hundreds, maybe 150, 160. GM, GE, solid companies that really are dying because the economy is evolving without them, have P's in 4 and 5. But the average company has a PE of 25 in the stock market. Now, the forward PE is what really interests you, because that way you can measure their price right now to their earnings in the future. And when you're an investor, all you should care about, not all you should care about, but you should definitely care the most about where the company's going and how their earnings are looking in the future. That's why guidance is so important on conference calls. Their forward PE is at a 16. Okay, that is extremely cheap for a company that's making revenue of $255 billion a quarter. Again, up 17%. And that is hugely profitable. I mean, their profit margin is at a 22%. So their net income is at 120, 130 billion. And as I said, services cost a lot less to produce than the products. So net income will keep rising even faster than revenue. Finally, how does a company survive a recession? We all saw it in 2008. Plenty of companies went down. Number one reason, balance sheet. This tells you how much cash and cash equivalents and investments a company has compared to the liabilities and the long-term and short-term debt that they're facing. A lot of companies will take out debt for business expenditures, for growth, and if they don't execute with that money they took out, then suddenly they got a whole lot of debt they got to pay back with interest, and the company starts going upside down. Just look at Lehman Brothers in 2008. Shout out to Morning Brew, by the way. Best morning newsletter out there. That's for business, at least. And then, so we looked at the stock. Huge revenue growth, highly profitable, products coming out. But what gets me excited? What makes me call this one of my favorite stocks? Makes me go overweight in my portfolio as far as allocation? Is the intangibles and the future. Some of the intangibles that a company only the size and quality of Apple can have is, number one, loyalty. People just refusing to try or even look at any other iPhone. Tell you what, ask one of your family members or friends that have an iPhone, what is the name of the new Galaxy phone that came out and how much does it cost? I'll be surprised if they tell you the name. Then there's values. Apple is one of the only companies, as we've seen, that values their customers' information and doesn't sell it. We saw Facebook get in huge trouble for this, not only with Cambridge Analytica, but now with elections and the upcoming midterm elections. By the way, how are you going to have an 80-year-old senator that doesn't know that Facebook makes money out of advertising trying to regulate it? That's just one thing. All right, so great values. They're also trying to help the environment. Every iPhone is now completely environmentally friendly, which is very nice. I mean, can't complain. Then we got R&D. Apple is very secret when it comes to their R&D, which doesn't allow them to get much credit. I mean, if you look at R&D, Siri was bought and then integrated into the iPhone. The Touch ID was bought and integrated into the iPhone. Plenty of other companies have been bought and seamlessly integrated into the iPhone with major success because they buy the best company that allows them to make their phone better so that no other competitor can compete, and if they want to, they have to try to make their own or find the second best company, which is pretty genius. Now, the third is that this is a growing industry. The tech industry, the internet is only 20 years old. To put that into perspective, I'm only 20 years old. The internet is only as old as me. I got a lot of potential, I hope. The internet has a vast amount of potential because the internet is not linear. It doesn't get better consistently. It's exponential. So the more time goes on and the more technology advances, the easier and the more effective those advances are going to be to society and the technology that exists, right? So right now, we don't see a lot of, I don't know, augmented reality or virtual reality. We got a taste of virtual reality. Some people are recording themselves playing in this game, right? Drawing art. But in general, I mean, you go over to anyone's house, they don't typically have a VR station because it costs $5,000, $6,000. Got to get cheaper. And then there's augmented reality. All we've heard of augmented reality is, well, if you're a real tech guy, living room and buying. So let's say you want to buy a shelf for your new house, but you don't have any room to put it. You want to see if it'll fit. You can display the shelf onto your room and it'll actually give you exact metrics and tell you if it'll fit or not and how it will look. And then the way that everyone got introduced to augmented reality without them even knowing, Pokemon Go. That little trend that went on for 5 to 6 months of people like a madman walking around with their phone looking for Pokemon. I mean, they gave them exercise, so look, no harm, no foul. But there's so much more potential to augmented reality than just Pokemon Go. And the number one potential is glasses. Apple is the perfect company to come out with glasses with augmented reality. And you know what the name is going to be? Eyeglass, eyesight, eye vision. Pick any one. Apple is made to design eyeglasses. Number one, their values. Any other company, for example, Google tried this to make glasses which not only display onto your eye, but need to have a camera looking out. So there's a lot of liability when you start recording people and giving them the ability to record people. I think Apple is one of the few companies that understands the responsibility with that and can handle it. Next, it needs to be simple and out to the masses. Just like the AirPods, just like the Apple Watch. If I would have told you that people would be walking around with these things hanging out of their ears and just talking to them all day, you would have said, you know, maybe I'll see a couple people wearing that. But you walk outside, you see 10, 20 people wearing these Apple AirPods when you go to a busy place. And that's what's going to happen with the glasses. So right now, just like Apple always does, they're not releasing any details. They don't want to give anything away. But I think in the next 2 to 3 years, not only will their service revenue continue to grow, not only will their balance sheet continue to grow, which they already have $243 billion in cash, But also, what's going to continue to grow is the technology in general. People are going to want to watch. Imagine if I told you that this phone could do the same thing in the 1990s as a computer could do. Now, imagine the technology in 2050, remembering that it's always exponential and continue to get better. For all these reasons, I see Apple as a great stock to buy. Right now, their stock is at $230, forward P of 16. And I'll tell you what, to the JP Morgan analyst that upgraded the stock, you're a little late. We all saw the service revenue was amazing when they reported their quarter. And you know what? Tim Cook says that by 2020 it will double. They're on track, and there's no reason for them not to make it. All right, guys. That's it for today. Hope you go and buy Apple. I'm not legally advising you or telling you that you're going to make money. I'm just breaking it down and telling you why I love the stock. Tune in next time, tomorrow, 5 p.m. Eastern. We'll have another great video. Take care.